Welcome traders! Today I will be bringing you a double stock review as part of my video series where I cover some of the hottest stock picks and look deep into their potential and value. These are stocks that I have either personally traded with success or ones that have piqued my interest due to their performance and growth. And before I get into it guys, I will be coming out with more videos including trading tutorials and stock picks each week. So if you wish to see more videos like this one, please hit the subscribe button and keep on watching. Now, today we will be discussing my top stock picks, Delta Airlines and United Airlines, ticker symbol DAL and UAL. I will be looking at the stock specifics, assessing the stock performance, company financials, as well as the financial health of the companies. We'll talk about the potential for short-term gains versus long-term gains. And finally, I will be giving my opinion as to whether I think these stocks are of good value and whether they will bring a good return on investment for you. Please note that I'm not a financial advisor or certified stock analyst, and this review consists of my evidence-based opinions, but should not be taken as financial advice. And to all my new subscribers, I do appreciate you being here and thank you for tuning in. For those of you who are new to the stock market and are still learning, I will be posting a separate video for all the terminology and definitions that I discuss in this video later on this week, so please stay tuned for that. Now, we all know that Warren Buffett has just ditched his pitch in all of these stocks, causing a massive sell-off earlier this week, bringing these stocks back down to their crash prices. And the general consensus has now become that because he doesn't see value in these stocks, that no one else should either. But I'd just like to say that just because Warren Buffett doesn't see value in these stocks, it doesn't mean that these stocks are not valuable, and it certainly doesn't mean that you can't make a profit from them. First of all, Warren Buffett is not a trader, he's an investor. He's a long-term investor, been doing it since the 1950s. And if there's a successful company out there, he's probably got a large stake in it. He also owns Berkshire Hathaway, which has hundreds of thousands of investors, managing a $450 billion portfolio. And as such, he has to answer to all of his shareholders for any decisions that he makes. So therefore, he can't be seen to be making poor decisions or causing any loss to his investors by investing in failing companies. And as I've always said to you guys, you have to make your own decisions as to what stocks you see value in. So his motives for buying and selling stocks may differ from yours. So with that said, DAL is currently trading at a price point of $21.70 per share. The 52-week low was $19.10. The 52-week high was $63.44. The average traded volume is 39.7 million shares daily. They have a market cap of 13.8 billion. The number of free float shares available for public trading is 637.9 million. The current analyst rating is that the company is undervalued, and I'll get into why in just a minute. For the short-term outlook, this current stock value is trading at a great discount in comparison to its 52-week high price point. So in relation to that, we can say that the current stock price is at a 66% discount from its high. In terms of volatility, so how much range the stock trades at, the volatility is currently 57.19%. So we can say that the stock is moderately liquid right now, which is said to be beneficial if you're looking to get into it for the short term. The volume of shares traded at last market open, which was May the 5th, was 50.8 million shares. So we can say that the stock is in high demand right now. The forward PE is 3.6%, so this is not that high. However, putting everything into context, I would say that the short-term aspect of this is that it is a good stock to buy short-term. Now, for the long term, this company has a cash flow of 5.97 billion, a current debt of 24.1 billion, before the bailout, which I will get into later, resulting in a cash to debt ratio of 24.8%, which is a moderate score in terms of financial health. And so if we take 100 and divide it by 24.8, we get 4. So this demonstrates that it would take approximately 4 years for DAL to pay off their debt at the present rate, which isn't bad in my opinion. So given the current ratio, I would say that the company's financial health is okay. And taking into consideration the fact that the current price is at its 52-week lows and the potential for growth over time is great as well, I would consider this stock to be a very good long-term investment. Now, as far as investor perks, annual dividends were 40 cents per share. However, those are suspended right now as the company struggles to find its ground after the coronavirus, which is completely understandable and is a wise choice on their part, in my opinion. Now, looking back at the stock crash that happened in March, we see that the stock dipped to $22.22 on March 23rd and also dipped again to $22.68 on April 2nd. So this represents the lowest price point that people are willing to pay for it. So in answer to the question of, is this current stock price worth it? I would say yes, it is. Now, looking at how much growth you can expect this stock to have in any given week, I took a snapshot of the growth of this stock from the period of April 6th to April 9th, with April 10th obviously being closed for Good Friday. And during this time, I found that the stock gained a value of $5.51 during that period, and subsequently experienced a growth of 24.37% during the same period. So in terms of how quickly you can expect a return on investment in any given week, I would say that there is a strong chance of you having a good return on investment with this stock. Now, again, if I were to buy this stock, I would be looking to get into it at around the $22 price point. And thinking about this speculatively, if we were to buy ourselves, say, 150 shares at the $22 price point for an investment of $3,300, the stock could potentially be worth over $9,500 with a potential return of over $6,200 during that time. So in terms of its potential, I would say that yes, there is a great deal of potential for profit and return on investment with this stock. Now, in regards to the company's publicly reported earnings, the quarterly Q1 earnings were reported on April 22nd. Delta reported an earnings loss of 51 cents per share, which is not as bad as the estimates that were between 71 cents and 84 cents a share. So it's not that bad. And the report also went on to say that they were losing about $50 million a day for each day that they were out of commission, which is understandable. And they had, as such, suspended shareholder returns in order to raise a total of $5.4 billion in return. They currently have a $6 billion liquidity to keep them afloat. So to put this into context, $6 billion divided by 50 million gives them 120 days to stay afloat at the current cash burn rate. In regards to the government bailout, they had accepted a CARES package of $5.4 billion with $3.8 billion in grants to use for payroll assistance and $1.6 billion in low-interest loans to be repaid in 10 years. Also, they were eligible for an additional $4.6 billion in low-cost loans. So this sounds like they had a good plan. This is a good plan that they've come up with. And especially since they don't appear to be doing what most other airlines are doing, which is giving the government millions worth of shares in exchange for this aid package. So this is a good thing as it shows their strength as a company. So with that said, overall, I feel like this company is a good buy for the short and long-term trader, especially since it's at such a discounted rate and will most likely drop even further as more bad news and bad earnings are released to the public. Now, moving on to UAL. This stock is currently trading at a price point of $24.14 per share, 52-week low, $17.80 a share, 52-week high, $93.03 a share. The average traded volume is 24.5 million shares daily. They have a market cap of $5.96 billion. The number of free float shares available for public trading is 247.5 million. The current analyst rating is that the company is undervalued. For the short-term outlook, this current stock value is trading at a huge discount in comparison to its 52-week high price point. So is currently a 75% discount from its high, so that's very good. In terms of volatility, the volatility is currently 70.19%. So we can say that the stock is highly liquid right now, which is of course very beneficial if you're looking to get into it for the short term. The volume of shares traded at last market open May 5th was 35.6 million shares, so the stock is in high demand right now. The forward PE is 4.8%, which is not that high. However, putting it into context, I would say that the short-term aspect of this is that it's a good stock to buy short-term. Now, for the long term, this company has a cash flow of $5.22 billion, a current debt of $23.4 billion before the bailout, resulting in a cash to debt ratio of 22.3%, which is a moderate score in terms of financial health. And taking 100 and dividing it by 22.3, we get 4.5, which demonstrates that it would take approximately 4.5 years for UAL to pay off their debt at the present rate, which isn't bad in my opinion. So given the current ratio, I would say that the company's financial health is okay. And taking into consideration the fact that the current price is near its 52-week lows and the potential for growth over time, I would consider this to be a good long-term investment. Unfortunately, there are no investor perks such as dividends offered by this company at the time. But if we look back at the stock crash that happened last month, we see that the stock dipped to $26.25 on March 23rd and also dipped even further to $23.42 on April 2nd. So this represents the lowest price point that people are willing to pay for it. So in answer to the question of, is this current stock price worth it? I would say yes, it is. Now, looking at how much growth you can expect this stock to have in any given week, and again, taking a snapshot from April 6th to April 9th, during this time, I found that the stock gained a value of $13.55 during that period and subsequently experienced a growth of 52.6% during the same period. So in terms of how quickly you can expect a return on investment in any given week, I would say that there is a strong chance of you having a good return on investment with this stock. Now, again, if I were to buy this stock, I would be looking to get into it at or around the $24 price point. And looking at it speculatively, if we were to buy 150 shares at $24 price point for an investment of $3,600, and say if we allow the stock to grow until it hit its previous 52-week high, the stock could potentially be worth over $14,400 at that time, with a potential return of over $10,800 during the same period. So in terms of its potential, I would say that yes, there is a great deal of potential for profit and return on investment with this stock. Now, in regards to the company's publicly reported earnings, the quarterly Q1 earnings were reported on May the 1st. United reported an earnings loss of $2.57 per share, so much greater than Delta as we see here. The report also went on to say that they were losing $45 million a day for each day that they were out of commission, again, which is understandable. And as far as liquidity, they currently have $9.6 billion in liquidity to keep them afloat, which is far greater than Delta. So to put this into context, 9.6 billion divided by 45 million gives them 213 days to stay afloat at the current cash burn rate, which is quite good considering what they're dealing with. In regards to the government bailout, they had accepted a CARES package of $5 billion, consisting of $3.5 billion in grants for payroll assistance, $1.5 billion in low-interest loans to be repaid in 5 years. And in exchange for this, the government will assume ownership of 14.2 million shares at a share price of $31.50 per share. So for context, the government will essentially own 5.74% of UAL's free float shares. And obviously, the government having a small stake in the company shows that the company may not be as financially independent as they could be, but nonetheless, they've taken the necessary steps in order to stay afloat for the interim. But, overall, I feel like these companies are good buys for the short and long-term trader, and especially since they are both at such discounted rates and their potential for future growth. So I do recommend, if you're interested in trading these stocks, then you can either buy them now as they appear to be at good buy points, or you can wait until the price drops even further, which they most likely will as more bad news and earnings are released to the public. And if you already have shares in this company, you could sell them now and buy them back at a lower rate or even average down, nothing wrong with that. But I highly anticipate both stocks to bounce back each week as news of the pandemic stabilizes and the economy slowly gets back to normal again. And I also fully anticipate that the public will clamor to start flying again as we move further into the summer season. So I do see both of these stocks recovering in the very near future. But guys, do feel free to formulate your own opinions and just use this review as a tool to help you in determining which stocks you feel are right for you. And remember guys, nothing is more important to a trader than having good risk management. So remember to never trade with more than 1% of your account at a time. Be sure to take profits early, don't get greedy, and always guys, have a stop loss once you're into a trade to minimize any losses if the trade does go against you. Always do your own research on stocks that you are interested in, and never ever take stock advice just because someone told you to do so. So anyway, I hope that you found this review educational, and if you do find value in it, please give me a thumbs up, as it really does help me out. And if you would like more trade ideas and help with planning your trades, as well as finding the best stocks to invest in, then please don't hesitate to reach out to me on Instagram at Trade With Me. That's a 3, not an E at the end. And you can also follow me for an instant follow back. And now it's your turn. Let me know in the comments if you will be trading this stock this week, or if not, I'd love to hear your thoughts. And stay tuned to this channel, as I will be coming out with new tutorials and hot stock picks each week. So be sure to subscribe for more content like this. And with that, I will say thank you for watching and stay safe, people. Peace out.